Welcome back. I'm Pratap here. In this video, let me explain about pierced zones. Please look into this column PIE and please observe my mouse movement. So I'm referring this column PIE. It is a short name for pierced or pierced zone. So this column indicates how many times a zone is pierced, either demand zone or supply zone. What exactly pierced? Previous topic we discussed about zone violation. Price goes out of a zone, that means it breaks the zone and closes and the price closes outside the zone. But in pierced zone, the price breaks, goes out of the zone and again come back and stay inside the zone. So such kind of zones are called pierced zones. So let me explain with an example. So let us look into some of the stocks having pierced count. Here it is having 5 times it pierced this particular stock. So what is this stock? RT Industries, and it is having a pierced supply zone and 5 times the price pierced and again come back to the zone. So let me go to the chart and show you this pierced zone. So please look into this zone. I already marked. It's for RT Industries. So it created a supply zone. Then price again went to the supply zone, tested, and the pending orders in this particular supply zone pushed the price again down. Again, after a couple of days, once again price get into the zone and it consumed all the pending orders. Supply zone is having sell orders, so it consumed all the sell orders and went out of the zone and again came back and finally price closed inside the zone. Again look into the next candle. Price opened almost close to the end of the zone and again it pierced, that means price broke the zone, went a little up, again come back, and finally closed outside the supply zone. Again after that price again went into the zone, again came down, went into the zone, again came down, went into the zone, again came down. Again price went into the zone, again came down. Again look here. Once again it pierced this zone. Going up, again price is coming down, closed inside the zone. Next day price opened outside the zone, again it came down, came down, came down. And in this candle, once again, price went out of this zone and again came back. And further price pushed out. So here one thing, generally one question will arise in our mind. When already all the pending orders are consumed in this particular supply zone, how come price is coming down? How come price is again tested and came down here, again tested in this zone and came down? From where all these orders came? Maybe new orders are placed by the institutions. It is a kind of trap because in general the normal supply and demand zone traders might be thinking it is a pierced zone. So it is easily past this particular zone. So somebody might have placed orders here, and institutions placed a new orders and consumed all these orders. That's why Pierce understanding Pierce zone is very, very important. Every time a Pierce zone may not push the price up. I mean, a Pierce supply zone may not push the price up. There could be a new pending orders placed by the institutions. That could be one reason. And the most important reason that I would like to explain, when price went out, why it is coming down? Again here went up, why it came down? So totally 5 times the price is pierced. This is the first candle, this is the second candle, this is the third, this is the fourth, and this is the fifth. That is what our report is showing. RT Industries supply zone is pierced 5 times. This PIE 5 times. So that is what we observed here. So why it is coming down? So here we should clearly observe the reason why price is coming down. There could be several reasons. Let me explain few important reasons. There could be another zone a little above this, and which is pushing the price down. And the second important reason could be there could be lower time frame zones that might be acting as a traps, and they are pushing the price down. Now let us monitor this first example here. Do we have any supply zones a little above this? Yes, here we can see. Let me draw. Here there is a drop, base candles, and leg out. See here, this it just went and touched the supply zone. Maybe there could be here so many pending orders which is pushing the price down. Again, second time, it went a little deep inside the supply zone. Again, it pushed the price down. Again, once again, it went inside the zone and again pushed further. So this particular supply zone is actually pushing the price down, and this pierced zone is getting are able to, it looks like it is able to hold the prices. It looks like pierced zone is holding the prices, but actually a zone just above that. This is a scenario called LOTL, level on top of the level. There is a concept in supply and demand zones, LOTL, level on top of the level. So there is one supply zone, and a little above that there is another supply zone. For time being, let us assume there is no supply zone just above that. So there is, when prices are coming down in such kind of scenarios, there could be some supply zones at lower time frame which are acting as traps, institutional traps, and they are pushing the prices down. So let us go to one time frame lower. So this is 125 minutes. This is a daily demand zone. Let's go to 125 minutes. This is a daily supply zone. So let us go to 125-minute supply zone, which is equivalent to 2 hours supply zone. So is there any supply zone a little above this? Yes. Here is a supply zone. Drop, base, drop. This is a 125-minute supply zone. Look here. Price went inside this 125-minute supply zone. This is acting as a trap, and which is pushing the prices down. Generally, what happened? The breakout traders, because the supply zone is breakout traders, so they wanted to take long orders. But actually, those who took the long orders here, they all get caught. Due to this 125 minutes supply zone is acting as a trap. And once again here, it went deep into the 125 minutes. And here there could be so many institutional pending orders which pushed the price down. And once again, it went into the trap. Institutions might have placed some more new orders here. That's why it didn't go deep into the zone. Again, it pushed the prices down. So this is the reason why understanding pierced zones are very, very important. That is one of the reasons why I included a column pierced, which indicates how many number of times the zone pierced. So here 5 times for RT Industries. So here Nifty Financial Services, it is 2 times the demand zone is pierced. And this one, Nifty Healthcare Index, 1 time the supply zone is pierced once. I wish you understand what exactly PIE. The PIE is a short name for pierced, and this column indicates the number of times a zone pierced the price. So whenever you find pierced zones, just keep a look whether above the supply zone or if it is a demand zone, just below the demand zone, and check if there are any traps, institutional traps are there. If they are available, it will be a good long opportunities if it is a demand zone, or short opportunities it is a supply zone. If the risk is less, definitely you can go for trade. So that way this pierced zones will be helpful to you from our NeoStock's supply demand zone strategy builder explorer report. So I wish this is useful to you all. And again, we will meet in next video. Have a good day. Take care. Bye bye.